You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss rebasing Nigeria's CPI, implications for businesses and households. It will also assess last week's rebasing of Nigeria's Consumer Price Index by National Bureau of Statistics. Dr Biodun Adedipe, an economist and chief consultant, BAA Consult, is joining me virtually for this conversation. It's great to have you, Doctor, on this program.
Thank you so very much. I'm happy to be with you today.
Thank you. Thank you. Let's first begin with your perspectives on the implications of the Consumer Price Index rebasing for fiscal policy vis-a-vis the current economic realities in the country.
Okay, thank you so very much. I think the first thing that we need to put in context here is the fact that rebasing simply means that we are using a more recent year as the base year for computing our Consumer Price Index, which I will use an analogy to explain. If you take a look at me and any person for that matter, what did I look like 10 years ago? And what do I look like today? Certainly, you will notice some changes. So in which case, if you are still carrying my photograph of 10 years ago, and you want to use that to identify me, assuming you didn't know me at all, might have some little bit of difficulty reconciling how I look then with how I look today. The same thing with economists, all right? And this is the way it goes. Now, some 10 years ago, the typical family in Nigeria had certain amount of income, and then we now ask, what did they spend it on? And then how much did they spend on food? How much on housing and other utilities? How much on transportation? How much on calls and the rest of it? So we saw that picture there, all right? Now it says, if you look at the same family today and ask them, how much do you earn? What do you spend them on? What percentage of your income today is spent on food, for example? So when you compare what it was the last time we rebased, the typical family in Nigeria will spend about 50% of its income on food. But now, looking at December 2024, same family, but the basket has changed in a way, but there were some things they were not consuming then that are now part of what they consume, number one. And also, the proportion of their income they spend on those items has also changed. You now see, for example, December 2024, that family spends about 40% of its income on food. So that means then that you cannot begin to act and also make policy based on what families were spending on 10 years ago. In fact, in our own case, it is 15 years ago, all right? So we now say, look, if we are going to look at what they spend money on today, we should be able to identify also where the shoe pinches the average family.
Yes.
So in terms of policy then, we want to come with policies that will address where the challenges are. Same thing will come to those families. Now, I know where most of my money goes, all right, as a spender. If I spend 40% of my income on food, is there anything I can do as a private, family, household that can reduce what I spend on food? Take, for example, small size of garden at my backyard. I don't even need land for that. I can get some containers. I actually eat my own vegetable. And I've been doing that, for example, in the last 5 years since COVID. So I cultivate vegetable at my backyard there. And so my wife doesn't need to buy vegetable from the market. We've been doing that now for almost 5 years. So that just illustrates it. So that is an inference I can draw from what it looks like today that I spent my money on as a family. So that is the basic interpretation.
Okay, that's interesting. A very interesting analogy. And what is your assessment of the reconstituted basket by National Bureau of Statistics for Consumer Price Index? And does it account for our current headline inflation? That's been the big conversation for January 2025. Everyone's saying it's gone down to 24.4% from 34% level.
Yes, I'm very happy you raised this issue for discussion. What we are saying today is not in any way to be misinterpreted as inflation rate has come down.
Yeah.
What it simply means is that we now have a better idea and understanding of what Nigerians spend money on. And looking at that, we now look back and say, okay, if we take 2024, December, as the period we are using now as the base. It means that spending in December 2024, we break it down to 100%. That means we assign weights. Like I said earlier, 40% of the weight goes to food. So now, if we take the same thing back to January 2024, and now look at what the figure will be, which of course will be less than 100, all right? We now compare the figure, the CPI for January 24, with what we have as CPI for January 25. That will show that it is 24.48% increase. That is simply what it means. Which means rebasing has brought us to a new, you can use this word, equilibrium. It's the new equilibrium where we are that has produced this figure. So to really talk about inflation coming down, we have to wait for the CPI for February this year, for March this year. So it is what those CPI say that give us an idea of whether inflation is going down or it is still sticky where it is, or actually it is going up. So we can't use comparison of January 25 with the last figure for December 24 to now infer that inflation rate has dropped. That would be wrong interpretation of what has happened. So now, talking about it being realistic, the basket as it is now, in my own opinion, is more realistic, which means it reflects the way we now spend, which is different from how we spent money some 15 years ago.
Very interesting, very, very interesting, Doctor. You know, when economists break this down, you now begin to appreciate analysis, and even Pro shares commentary on the inflation rebasing. Captured the fact that analysts, however, have warned that lower rebased CPI, while crucial for policy guidance, may not necessarily imply an improvement in household and business economic conditions. I know that the Lagos Chamber of Commerce and Industry have also raised concerns that the price levels still need to feel the impact of households. Yes. But Doctor, last week, exactly Thursday, the Monetary Policy Committee meeting of the Central Bank of Nigeria had their first meeting, and at the end of the meeting, they retained the monetary policy rate at 27.5%, and other parameters were retained, 50% cash reserve ratio. What are the implications for the economy? What do you see from this outcome of this MPC meeting? Because some of your colleagues talked about the need for them to moderate the tightening of the interest rate and also begin to look at the realities in the economy.
Yeah, thank you very much for that question. When we look at the decision made last week, some of us expected it anyway, that the CBN will hold the rate. And of course, all the other rates and the asymmetric corridors that they will maintain them, which they did, the decision they made last week. Now, what does it mean? Now, what I usually do when you ask questions like this relating to the decisions of the MPC, I put myself in the position as a member of that committee. And I say, okay, if I'm involved in the conversation that they normally have, before each person will vote as to where he or she wants the race to go, I would have looked at it the same way, in the sense that we are rebasing CPI. So which means whatever comes out, which we now have as 24.48%, is not enough for me to make a decision whether inflation rate has gone down or gone up. Which case I will wait until our next meeting, by which time the data for February and March would have been out. And I can now see whether truly inflation rate has dropped, or it remains the same, or it has gone up. I can now begin to think of what we should do with the NPR. So if I were in that committee, that would have been my position. So which means the changes, let me say the change in the CPI and the inflation rate, for me, is not sufficient to move the needle of the NPR. And don't forget also, we are still awaiting the rebased GDP.
Yes.
Okay. So when that also comes out, and then I'll see the way inflation behaves, I can begin to talk about what to do with NPR. Of course, we all know if we want growth, that NPR should go downwards. But that also has to be balanced, because as it were, the FX market has stabilized. That's why the Naira-dollar exchange rate has been stable in the last 2 months thereabout. So when we look at all that, what it tells me is that I need to still wait to see the outcome of the rebasing of GDP, vis-a-vis inflation rate, and then the desire for growth of the economy, which is suggest that interest rates should go downwards. So it's just a wait of maybe another 2 months.
Yeah, very interesting. Doc, beyond the fact that you're an economist, you're also a consultant. You also provide insights to businesses. I mean, I watched you earlier this year. You talked about you at the First Bank Economic Outlook and various other Economic Outlook sessions. How should businesses and households position this period with the rebased consumer price index and with the current hold position of the central bank?
Well, in my own outlook for the economy, we expect that the economy to grow this year, no doubt. And we are looking at about 4.12%. That has not changed yet. Maybe when we see the rebased GDP and the sectors that are now more important, about some that are less important, just like we saw with CPI rebasing. All right. So what we now do is take another look at the dynamics of the market. The one thing we are expecting anyway is to see a bigger ICT sector. And why do I say that? When you look at the economy in Nigeria, it's expanding rapidly and also in an interesting manner. Where revenues now from ICT is expected to increase significantly this year and next year, 2026. But the projection for 2026 is about $18.3 billion revenue from ICT-related economic activities. So we are looking forward to that becoming bigger. So when we now play against each other, the dominant contributors to GDP and the sector that are growing very fast, because this data will also show that. That will now give us an idea, depending on the business that anyone does. You combine those two, sectors that contribute the most to the GDP, simply means that is where most value is being created in Nigeria. Then the second leg is sectors that are growing very fast. The ones growing fast also present opportunities. So if I'm in business, the nature of my business, we make now identify those two groups of sectors and give more attention to them in my business development. That is how we connect it. Now, the other side is in terms of interpretation. Is if in BA Consult we expect GDP to grow by 4.12% this year, how will you apply that to your business? It is not to grow the Naira revenue of your business by 4.12%. That won't help your company in any way. But what we recommend is that take your revenue for 2024, convert to US dollar using the rate at the end of 2024. Do the same for your revenue of 2023, convert it to dollars at the prevailing exchange rate at the end of 2023. That will give you the growth of your revenue in the last year in dollar terms. Okay, so if you want to now be the buffer for exchange rate dynamics, what you now do is you project to grow your dollar income this year by not less than the projected growth rate of Nigeria's GDP. If you're able to do that, that means your organization is not growing at a rate slower than the economy, which if it does, that means a particular entity in this space, not necessarily your competitor, is growing at your expense. So if you don't want others to grow at your expense, that means you must aim to grow faster than the GDP. But do it now, measuring GDP in dollar terms. That is a safer territory than growing faster than Naira GDP. So that is for businesses, all right? And that will take care of exchange rate dynamics as well as inflation rate. So that is for growth aspiration. Now for individuals, talking about families,
households.
First thing you want to do, households, yes, is to interrogate your spending. But what we now advise is that if you look at the environment, the Nigerian business environment and economy is now more attractive to investors within and outside Nigeria. So in that case, you look at what you earn, and then this takes a lot of discipline. Discipline that compels you to put some money into investment. There are many instruments. In fact, that's the plus side, positive, in the NPR that was increased last year, okay, making Naira assets more attractive. So why won't you also, as a household, think about that? In which case, it is not a year to spend everything that you earn. And that means saving investment must be put as a first-line charge ahead of spending. And the discipline there is that if you put it away, recognize the economic argument for saving and investment. What we call saving and investment is opportunity for greater consumption in future. So at times we call it postponed consumption. So households should deliberately look in that direction. And then whatever remains, you now ensure you spend according to priority. Mm-hmm. If you want to buy an asset, you don't necessarily have to use your money. There are now many opportunities in the reformed Nigerian economy. Take a look at Nigerian Consumer Credit Corporation. Yeah. Okay. In there, you can access cheaper loans than what you get from the banks. But how does it go? You can use those loans to buy vehicles, household furniture, televisions, refrigerators, freezers, and the rest of them. Even phones. So quick means you have access to all those things that make life comfortable on the one hand. But that policy also says you must buy only those that are made in Nigeria. Which if you do, you are also creating business for those entities. Yeah. In turn, those entities can also create jobs. So it then means that maybe some things you used to buy with your own money in yesteryears, there's now a window to buy them with credit that is affordable. So those are the things also should look at. And many others. Therefore, we take care of students, school fees, and even stipend for students. So all of these are available that households should begin to explore in order to get, a better standard of living on the one hand and not needing to complain so much about the environment. Rather, take a look at those opportunities and take advantage of them.
Doctor, as we wrap up, let's look at, in 1 minute, the current budget, the budget that has been passed by the National Assembly. They're still looking at some rudiments of it again. It's approximately 55 trillion naira.
Yeah.
What's your take and what's the word for the fiscal policy authorities in terms of funding this budget and being able to achieve some level in capital expenditure that would unlock economic opportunities?
Okay, excellent. Thank you very much. Now, one thing I observed immediately is that the allocation for capital expenditure at 41% of the total is a better direction in terms of allocations compared to yesteryears, which is positive. But my own take there is that capital expenditure, let's back out the proposals for furniture, for cars, office equipment. So we see the real capital projects in there. Two things to do. Number one is to ensure that the funding of those capital projects should be prioritized because they are an enabler of business. That's number one. Number two, if the government is going to issue any bond, which is an instrument that dominates federal government debt as we speak now, about 54.78% of federal government borrowing as of September 2024 was from FGN bonds. Okay. So if they are going to raise any bond at all in funding this budget, let it be bonds that are project tied. So that means if they borrow at all, it should be project tied. That will, of course, help improve the business environment. The third one I will say is this, that in executing this budget, we should shift attention from a scorecard that talks about how much was spent and now begin to measure the deliverables. How many kilometers of roads we are delivered, how many bridges in the soft infrastructure, how many schools we have built, how many hospitals, how are they even funded? Because many times capital spending also creates the current spending. That's in terms of maintenance and running. Okay. So we must not forget that as we spend on capital, we must also begin to look at providing for maintenance and also for running them. So if we begin to measure those, then we get value out of this budget. I'm happy with the figure. The figure is good. We'll convert it to dollars. That'll be the highest ever we have done in Nigeria. So I will leave it there because of the time.
Thank you very much, Dr. Biodun Adedipe. Always an interesting session with you, enlightening session, things to learn from. And thank you for this conversation on the rebasing of the Consumer Price Index and the implications for businesses and households in Nigeria. Thank you once again, Dr. Biodun Adedipe, an economist and chief consultant of Biodun Adedipe Associates Consult. Thank you for the time, and we'll still get across to you much later in the year to look at the performance of reforms in the economy. Thank you once again.
Thank you for having me. Always a pleasure conversing with you.
Thank you. Thank you. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further. Until we come your way again, enrich yourself with knowledge of socioeconomic developments around you. It is wise. Ottoabasi Abasiekong, thank you for watching, and bye for now.